Let's move on to Weyerhaeuser here. Their symbol is WY. Now, this is surprising. They're not a company. They're a real estate investment trust specialty because of all the lumber. Shares float 2.5%. PE ratio pretty high, 47.1 versus 52.8. Price of sales 2.2 versus 6.2. That is good. Price to book value 1.7 versus 5.6. Price to cash flow is 17.6 versus 16.8. No PEG ratio there. Unfortunately, I don't know if it's from the tariffs or the slowdown in the housing industry. Their earnings over the last year are down 37%. The industry was down 12.1%. The sales, however, they did drop, but only by 1.6%. The industry was down 3.6%. The 5-year earnings per share growth estimate for Weyerhaeuser is 7.8 versus 11.1. They do pay, I'm going to call a decent dividend at 3.9%. However, because of the pullback in their earnings, you're using 180.4% of the earnings to pay out that dividend. We do see on the balance sheet, you've got a current ratio of 1.2 versus 1.5. Debt to equity is very good, 0.6 versus 3.4. And that's so important because during difficult times, you don't need to pay the creditors as much, so you can kind of weather the storm. We do see a net profit margin of 4.7 versus 12.1. Return on equity, not very good, 3.5 versus 9.8. And let's see, the cash flow, free cash flow, only 89 million versus 1.4 billion. So I'm, again, not finding something on this company I really like or this REIT that I really like unless you got something good going forward.
Well, I just kind of find this interesting, but the company actually began operations in 1900.
Oh, wow.
So it's been around a while.
125 years. And we call it a company. And I think it used to be a company. And I want to say 5-10 years ago, I think they reclassified as a REIT because of all the lumber I think they have and all the forestry that they own.
Well, here you go.
Okay.
They control approximately 10.4 million acres of timberlands in the U.S.
Oh, wow. That's a lot.
As well as additional public timberlands managed under long-term licenses in Canada. So, I mean, they have a lot of real estate. We'll call it that. But let's look at the numbers here for, again, Weyerhaeuser. Their ticker symbol WY, $21.69 is the current price. 52-week range, the low here, $21.16, and the high, $32.70. So it's really struggled over the last year. It's actually down about 31%. Over the last 5 years, down about 28%. Over the last 10 years, let's see, it's not wanting to give me that number, unfortunately. But it looks like it's essentially about flat to slightly down over the last 10 years as well.
Yeah, last 10 years, it's up 1.8%.
There we go. And that includes the dividend.
Yeah.
Now, going forward for the company, since it is a REIT, we look at FFO, or funds from operations. We go out to December 2026, estimated FFO of $1.14. Unfortunately, it gives us a target sell price of just $18.92. So it's still slightly overvalued based off that FFO. And I'm curious how much that depreciation really is, because generally we have buildings, that's what you're depreciating. Right. But if you have lumber and land, I wouldn't think the depreciation would be as heavy.
I think there's something different with the trees, how they account for them. And to let people know, I mean, the earnings per share on the REIT is 25 cents. You said the FFO was, what, $1?
$1.14.
Yeah, because of the depreciation. And unfortunately, we can't talk about it anymore. The show is over.
But wouldn't be a buy.
No, would not be a buy.